Welcome back to Explain the Charts. Today, September 16th, 2025, we're dissecting ETHUSD, providing an in-depth analysis of recent news and chart data. The cryptocurrency market is currently a hotbed of activity, and Ethereum is firmly in the spotlight, driven by significant institutional interest. Recent news highlights substantial whale activity, with firms like BitMine Immersion aggressively accumulating Ethereum, signaling robust confidence in its long-term value. BitMine alone has acquired hundreds of thousands of ETH, contributing to fears of an impending supply crunch, a sentiment that could profoundly impact price dynamics. Adding to this bullish narrative is the increasing staking activity, with nearly 30% of Ethereum's total supply now locked up, further tightening the liquid market supply. Beyond Ethereum itself, the broader crypto market is experiencing strong tailwinds, as evidenced by consistent inflows into both Bitcoin and Ether exchange-traded products. These ETF inflows are critical, acting as powerful signals of growing institutional demand and diversifying balance sheet holdings beyond just Bitcoin. Globally, Wall Street is abuzz with anticipation of the Federal Reserve's first interest rate cut, a move that historically tends to favor risk-on assets, including cryptocurrencies. However, underlying concerns about rising consumer inflation and a weakening labor market could introduce caution, creating a complex macroeconomic backdrop for digital assets. Now, let's transition to the daily chart to visualize how these powerful fundamental forces are influencing the price action of ETHUSD. From a macro perspective, the daily chart clearly illustrates Ethereum's compelling upward trajectory since early 2024, characterized by an overall bullish trend despite inherent market volatility. Focusing on the period from May 2024, Ethereum was trading around the $3,000 level, establishing a foundation for what would become a significant rally. A notable price surge occurred on May 20th, 2024, where ETH dramatically spiked to highs near $3,700 on exceptionally high trading volume. This intense buying pressure likely reflected a major bullish catalyst, perhaps an early anticipation of institutional products or a large-scale whale acquisition, propelling price upwards by over 19% in a single day. However, market sentiment quickly shifted, and August 5th, 2024, saw a sharp and aggressive downturn, with Ethereum plummeting to lows around $1,900 on exceptionally high volume. This dramatic capitulation, marked by staggering volume of over 870,000 ETH, indicates widespread panic selling or a significant liquidity event, possibly linked to the broader crypto market corrections observed at that time. Following this deep and brutal correction, Ethereum demonstrated remarkable resilience, initiating a strong recovery phase characterized by consistent higher lows and higher highs. This pattern underscored robust underlying demand and a willingness from buyers to step in and accumulate at discounted levels. The recovery culminated in a new all-time high on August 24, 2025, when ETH reached $4,958.70, validating recent news of strong investor accumulation and diminishing selling pressure as it first surpassed $4,500. This peak, however, met with strong overhead resistance, leading to a period of consolidation and a subsequent pullback. This behavior is consistent with analysts identifying the $5,000 psychological level and the $5,200 realized price upper band mentioned by analysts as critical barriers. The price action around these levels suggests a battle between persistent buying interest and profit-taking or supply from earlier investors. Throughout this period, the $4,300 to $4,400 range has solidified as a pivotal support zone, often seeing renewed buying interest and exchange withdrawals, reinforcing its strength. The sheer volume during key upward moves, such as in May and August 2025, suggests genuine market participation rather than mere speculative spikes. This long-term perspective clearly sets the stage for our current market position and potential future movements. Transitioning to the one-hour chart, we gain a more granular perspective on Ethereum's immediate post-8H price behavior, specifically examining the period from August 26th to 29th, 2025. Following the all-time high on August 24th, ETHUSD entered a distinct consolidation phase, trading largely within a bounded range between approximately $4,400 and $4,600. Within this range, we observe minor oscillations, with bulls attempting to push higher, only to be met by sellers, creating short-term resistance levels around $4,550 and $4,600. The overall sentiment during this short-term window exhibited a slight downward bias, forming what could be interpreted as a bearish pennant or flag pattern on some intraday views. However, the trading volume during this consolidation was moderate, indicating that neither buyers nor sellers were dominating with overwhelming force, but rather a balance as the market digested recent gains. This phase is often a precursor to a larger move, and traders should be particularly attentive to a decisive breakout above or breakdown below this current range. A sustained move above $4,600 would suggest renewed bullish momentum, while a break below $4,400 could signal a deeper retracement into previous support zones. Now, for the ultra-short-term perspective, let's examine the 15-minute chart, focusing on the volatile movements observed throughout yesterday, September 15, 2025. The chart reveals multiple rapid price swings, indicating a highly active trading environment with both aggressive buying and selling pressure. We can pinpoint a sharp decline from above $4,600 earlier in the day down to approximately $4,460 within a few hours. This rapid descent was met with immediate and strong buying support, as evidenced by the quick bounce back towards the $4,525 mark, forming a V-shaped recovery. This swift rebound from $4,460 confirms that significant liquidity exists at these lower levels, suggesting that institutional players or large investors are actively buying the dip. For intraday traders, the $4,460 level proved to be a robust immediate support, while resistance was encountered around the $4,550 to $4,600 zone throughout the day. The persistent attempts by bulls to breach these higher resistance levels on the 15-minute time frame show underlying strength, even if they were met with some profit-taking. Observing the transaction volume during these microtrends is paramount. Spikes in volume during upward moves confirm genuine buying, while high volume on bearish candles can signal capitulation or distribution. To synthesize our analysis, let's consider the overarching bullish and bearish arguments for ETHUSD. The bullish narrative remains compelling, bolstered by the structural supply squeeze driven by aggressive institutional accumulation from players like BitMine and the consistent growth in staked Ethereum. These factors, combined with increasing mainstream adoption and ETF inflows, paint a picture of strong fundamental support for higher prices in the long term. Analyst price predictions, ranging from $6,000 to $12,000 in the coming months, and Paul Barron's bold $15,000 target by December 2025, reflect this strong underlying confidence. The ability of ETH to quickly rebound from recent dips, particularly the strong recovery from $4,460 yesterday and the established $4,300 to $4,400 support range, indicates robust buyer demand. A decisive, sustained break above the $4,700 resistance, and crucially, the realized price upper band at $5,200 would likely signal the next significant upward price movement. The probability of ETH reaching new all-time highs above $5,000 and pushing towards $6,000 in the medium term, say over the next 3 to 6 months, appears moderately high, perhaps around 70 to 75%. This outlook is reinforced by the positive institutional sentiment and the dwindling supply on exchanges. On the bearish side, a failure to convincingly break above the $5,200 resistance could lead to prolonged consolidation or a deeper corrective phase. A sustained breakdown below the $4,300 to $4,400 critical support zone would be a clear bearish signal, potentially opening the door for a retest of the $4,000 psychological level, or even the mid-$3,000s from earlier this year. Such a move could be triggered by unexpected hawkish shifts from the Federal Reserve, significant regulatory crackdowns, or a broad deleveraging event across crypto markets. The likelihood of a sharp, sustained drop below $4,000 without a significant external negative catalyst appears lower, perhaps 25 to 30% in the immediate term, given current accumulation trends. To make informed trading decisions, keep a close watch on these key price levels. Immediate resistance at $4,600, followed by stronger resistance at $4,700 and the all-important $5,200. Conversely, immediate support rests at $4,460, with robust foundational support found in the $4,300 to $4,400 range and the psychological $4,000 mark. Should ETH break above $5,200, the path to $6,000 and potentially higher becomes much clearer. Conversely, a break below $4,300 would imply a test of $4,000 and potentially deeper, invalidating the immediate bullish outlook. Beyond price action, monitor Ethereum's exchange net flow data. Continued net outflows would reinforce the supply crunch narrative and bolster prices, while net inflows would indicate distribution. Also, watch for any major announcements regarding Ethereum 2.0 upgrades or broader market regulatory clarity, as these can serve as powerful fresh catalysts. Always remember that the crypto market is inherently volatile, so always employ sound risk management strategies and only trade what you can afford to lose. That concludes our in-depth analysis of ETHUSD for today. Be sure to like this video, subscribe to Explain the Charts, and hit the notification bell to stay updated.